Hello, hello, hello. Welcome now, Stock Trades. In this video, we're going to be talking about something extremely important, okay? So Corsair Gaming, there are a couple of red flags that I saw within the financial statements. In this video, I'm just going to be focusing on the statement of cash flow. A lot of people have been saying that this company is profitable. They're lying to you or they're misinformed. A change in their profitability just happened. Who knows? This could be a supply chain problem issue that they're experiencing. It could be that the pandemic effect is waning, that a lot of people are basically matriculating back into workspace, and perhaps maybe they don't need to update their particular tech because they've done so. So this is extreme. This is very extremely important, guys, okay? So we're going to go ahead and explain to you what I mean. So what I did is I took the statement of cash flows directly from our brain machine technology. I took the free cash flow and put it up here. If you don't know how to read statement of cash flows, we do have a Mastering Stock Market course available, link down below. But what we're going to be doing here is I want us to show you some red flags here. We're going to first focus on the net income. In 2019, Q3, they had $1.5 million, $6 million, $22 million in Q2, $36 million in Q3 of 2020, $43 million of Q4 of 2020. Then you got $46 million. Everything was going great until the first red flag happened, which was right here between Q1 of Q2 of 2021. And then now the third red flag, most recently in the quarter here, we have a negative net income, meaning that as of right now, they are unprofitable. So what's interesting here is if you focus in on the particular Q1 and Q2 of the free cash flow, you can see that the free cash flow is a later predictor of net income, which is interesting because it's quite opposite of Tesla. So what we saw is a decrease in net income, which ultimately then after a literally quarter, we saw another red flag, which is a decrease, in fact, a negative free cash flow. Definitely not what you want to see. So what we're going to do here, we're going to go ahead and graph this because I think a picture says 1,000 words. And we're going to go ahead and say it as follows. Again, 2022 is going to be on your left and 2019 is going to be on your right. So we're going to go here, make this big so you can see it, and put this graph, okay? And what we want to do here is we want to stop Discord from beeping so we can focus in on this here. So I'm sorry for that. We're going to go ahead and delete chart title because we already said this is, free cash flow, net income. We can see that the company has been doing well with this net income. It started growing up. They started becoming positive, and the free cash flow has been doing well. But as soon as the net income started to slip, it was a signal for the free cash flow that we're going to head through some dark times. And now the net income and free cash flow has been decreasing to a point where we're in negative territory now. This shouldn't be for a company like this. This company is about to be, is unprofitable, and they may stay like that, meaning that if they don't have a path out of profitability, while a lot of companies are going through profitability, a lot of, Wall Street is basically putting a lot of money in essentially, wanting free cash flow generating businesses, which will basically add value to your shares and it adds value to your company. Well, this company just hit negative on the net income and negative on the free cash flow, and they hit actually negative back here. So that's obviously reflective of the stock price, which is, why, if you want to ask yourself, well, a lot of people that unfortunately don't know nothing about investing, that unfortunately have a very prominent effect on people, they're saying, well, this is a profitable company, when in reality, no, it's not. This is not a profitable company. This company has a negative free cash flow and a negative net income. Okay, if you don't believe me, just look at this. It's below the $0 line, and it's right here, guys, the most recent. So I just want you guys to know this, and hopefully maybe they might be able to redeem themselves during 2022. But this is dangerous, and there could be more free fall for this company, which is why it basically started falling. A lot of free cash flow, net income positive companies are not engaging in such issues, but this one is. So I hope this was helpful. This was definitely going to be one of the shorter videos. I just wanted you to see that, and please comment down below what you think, and I'll see you on the next one.